Good morning, Kong, Polly, Eamon, Tony. Hope you all had a good New Year, good Christmas time, and a nice holiday season. All right, before we get started, if you all could just toss a 1 up there, let me know my audio is working well. And hopefully it's not buffering. No technical difficulties today. Excellent. Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. I hope you're doing well. We're going to get going this morning. I've already done a little prep work. This is not a financial advice. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please feel free to read through this, pause the stream. I'm not a financial advisor. This is not financial advice. Good stuff. So I've done a little prep work and got the tips and tricks slide all set up for us. Just a reminder, it's been a little bit, it's been a little while since I've done this. So let's go through and just do a little quick reminder of what to look for coming into not only on a Wednesday, but every single day, looking for these 3-day templates. Because remember that, yes, there are the Monday, Tuesday, Wednesday, Thursday, Friday templates, but there's also other types of 3-day templates. It could be Friday, Monday, Tuesday. It could be Tuesday, Wednesday, Thursday. There's lots of different variations, but these are the variations that I'm looking for on each or any given day for these trades to build up over 3 days. So, market closed on the outside of the opening range. Now, as I'm reading through this slideshow is built and made for Monday, Tuesday, Wednesday templates, but you can just exchange and remove some words, right? So close outside of the opening range on a Tuesday, probability of Wednesday continuation. But imagine if I were to replace that and just say, remove the days of the week and just say, hey, there's a day and then a breakout day. And then on the third day, I'm looking for maybe a trend trade because the market only does 3 things: breakout, pullback, trend, breakout, reverse, or stay in a trading range. This is in breakout modes. So if you get a breakout and then on day 2, on the first day, that would be the day that creates the range. Day 2 is a breakout day. And then on day 3, maybe you get 3 levels of drop. Maybe it's, just a breakout continuation day, low of day trade, something along those lines. You can just remove some of the words and you'll still have the same exact templates. So let's read this real quick. Market closed on the outside of the opening range on a Tuesday. Probability of Wednesday continuation increased significantly. This would be a breakout pullback template or a opening range breakout style of template. And that's the little drawing that I just showed you. Market closed as a failed breakout on Tuesday. Probability of reaching the other end of the opening range increased significantly. Again, kind of think about what this sounds like. Maybe like a first green day or a first red day. So you have a range day and then a day that the breakout fails. Maybe you get a first red or a first green if I were to flip this over. And then you get your first red day trade on that third day. Number 3, if Monday's breakout fails and then Tuesday's breakout fails at the other end of the week, high probability for parabolic trend trade on a there's some deer out there, on a Wednesday. So what that is saying is essentially peak formation high, peak formation low. Either one of these 2 templates here, which I'm about to read the other one, which I probably should have just read it. Sorry for scrolling back and forth. It's probably really annoying. If Tuesday hits both sides of the opening range, so that would be like an outside bar or an outside day, potential for parabolic trend trade increases. All right, so let's go down. We'll take a look at those 2 little fancy drawings. First day, it's got a previous day's high and a previous day's low. It could be a narrow range, could be a wide range, doesn't really matter. And then the second day, they spike both sides of that range. That would be an outside day or an outside bar on the daily chart. And then on the third day, I always kind of project the parabolic move to the upside. It doesn't have to be to the upside. It could be either way. All right. And then over here, this would be like the peak formation high, peak formation low, more of like a 3-day rectangle or a 4-day rectangle, something like this. You could project these across. The first day puts in peak formation high. The second day comes down and puts in a peak formation low. And on the third or the fourth day, you would get your parabolic move either to the upside or to the downside. All right, and I've left a little note up here. I put sometimes. This is 3 days of breakouts, right? First day breaks out, second day breaks out, third day breaks out. Maybe you get a first red day on that third day, and then maybe on the fourth day is the day you take your trade. Or maybe on the third day, timing works out. They work the high of the day. You get the reversal on that third day. Sometimes, and I'm doing this video this week on 3 days of breakouts, so hopefully you're interested in that. But it's not always going to be a day where they close in breakout. Sometimes it'll do this little like turtle peeking thing where they poke their head out of the shell. They pop back into the previous day's range, and then the next day they do the same thing. And it just keeps on doing that, and then either on the third or the fourth day, you could get a reversal, or it could just be a stop hunt, but you can still get a really good trade. And I almost kind of prefer the stop hunts because they're usually very fast, very aggressive, and they go back for the money very quickly, which I don't like to be in trades for very long, so that's kind of, a preference. Let's see here. Okay. Those are the templates looking for every single day, whether it be 3 days of breakouts, first red or first green day, outside days, peak formation high, peak formation low. These both here are like 3 days of rectangle, or just, breakout, pullback trend, things like that. What's the best time to see it clearly? Paulie, I'm not sure exactly what you're asking, but thing about the clock is if it's getting to like 10 or 10:30, let's say that you want to go long. This is a big thing with me. If I want to go long and it's at the high of the day and they're working the high of the day, and let's say it's like 10:30 or so, maybe the timing isn't right because I don't want to be going long as they're poking up into the high of the day. So I'll probably just not take a trade on that pair for that day. Whereas compared to if I want to go long and it's dumping down at 9:30, and then you get the new hour open, something like this. Hey, that's really good because that's, setting up appropriately. 5 or 15. Yeah, I use the 15-minute poly for my analysis like we're about to do. 15 minutes and the 1 hour chart kind of makes it really easy to do the analysis because I'm mainly using the previous day's high and the previous day's low. But once on the day itself, I'll use the 5-minute chart and the 15 kind of in combo, but mostly the 5 to see what the day looks like. Let's see here. All right, and then ultimately, these are the templates. This is the playbook. This is the kind of the note card style fashion that I use in order to identify these different types of trades. It makes it very simple and very easy, and I would highly suggest that each one of you in your studies goes back and makes one of these for yourself. It really does help quite a bit. All right, let's go and get into the analysis for today. I've left my notes up there on the screen so you can see the evolution of the templates, and you don't have to sit here and watch me go through and type all this stuff because I'll misspell things 1,000 times and it's kind of probably annoying. So we got the dump. We started over here Monday, Tuesday, it would have been Wednesday. Monday through Thursday over here, we get the dump down. And then on Friday of last week, we get the first green day, and that was breakout day 1. Okay, this was day 1 of the 3-day cycle because they had triggered the previous day's low at the low of the current week, and they closed in breakout. And on the next day, the breakout failed, and they actually broke out to the other side of the range, day 1, day 2. So knowing that, on the next day, on Monday, I know that it's going to be day 3 of the cycle, and I would be thinking about, hey, what kind of trade do I look for? Well, this was a breakout day 1, and a first green day, so I should be looking for a long trade on Monday, which took place in, it looks like, Asia and London, and then continued to go vertical throughout the day. However, I'm watching this, I'm looking at this, and I'm thinking, hey, we're up high, we've triggered previous week's high, and it's working the high of the day. I probably shouldn't take this trade because I'm just trading based off of direction and not based off of reoccurring setups. It worked out great in this scenario, but how many times have I seen this where it reversed from this point? I would be just guessing the direction, okay? So that was breakout day 2. They closed in breakout on Monday. That's also the opening range for the week. They set the high and the low. On the next day, this becomes day 2 of the cycle because this was day 1 and the cycle has to continue no matter what. So this would revert back day 1. They have not triggered the other side of the range yet. That's fine. This is day 2. And we get the peak formation high made on day 2. Now, coming into Tuesday, Tuesday is usually going to be the day 2, typically expands the range of the opening range of Monday, right? So based off of this, I don't know really what to look for unless I look for a scalp or something like that. Nothing really set up yesterday, in my opinion, that I could look for a solid trade. Until the news took place, this was 10 o'clock, and this gave really good opportunity for you to look for the continuation down to or into the higher level longs from these breakout trades over here. All right. Notice kind of where the price went back to initially this breakout day. So if I traded this, the breakout, if I bought this here or here, going back into those people very aggressively, basically the stop hunt. I did not take this trade, but that could be the thought process that you're kind of going through. All right, we'll take a look at it on a 5 as well. Very clean chart. You get the breakout. This was the news. Next bar opens up. Anywhere in here is fine. Anywhere underneath this bar's close is fine. All right, now going into today, what has happened? What is the evolution of the template? Breakout day 2. Day 2 of the cycle was yesterday. So that means that today is going to be day 3 of the cycle. And it's also day 3 of the week. It's Wednesday. We're at the low of the current week. And yesterday was a breakout day. All right, many of you that have watched this stream and are hopefully listening now have heard me say a bajillion times, if you get a breakout day, project the level across, because the market only does 3 things. And I want to be aware of that level the next day, breakout trend, breakout reverse, or stay in a trading range. And now I can go and I can look and see what has happened on the day. So, Paulie, going back to your question now with, pictures and whatnot. I look at this and I can pull it up on the 15-minute chart and say, okay, yesterday was breakout day 1. So what would be the trades that I would look for on breakout day 1? You can look for 3 levels of rise for a trend trade. If the market is already broken down, you can look for lower low, 3 pushes back up into the high for the continuation trade. Or depending on the timing, let's say that they're working down here at the low of the week. We've triggered previous days or weeks low. Previous days low in this case. Let's say, for example, that they're working the low and my high is really far away, so I can maybe get a trade. I'm taking the stop hunt or the pullback trade back up towards the high of the day based on timing and how they're working the chart. But ideally, the most textbook setup would be breakout day 1, look for 3 levels of rise for the continuation back down, which has kind of already happened. We get the breakout, 3 levels of rise. I don't know what, let's see here. Hey, perfect. So 100 pip box, peak formation was put in at double zeros, and then you get your 3 levels of rise to 75, and then the engulfment, but this was in the gap time. All right, so that was the trade, the most textbook trade in my opinion. And let's see what else. Yesterday was also a first red day. So maybe coming back to thinking big picture, where this pump began. What kind of news do we have for today? FOMC. Okay. I think this is good. And if you didn't catch it, I'll say it one last time. Breakout day 1. Look for 3 levels of rise for the trend continuation. That is the textbook opportunity. Working the low of the day, working the low of the week. I would more consider a scalping opportunity unless we had something like 3 days of breakouts down or 3 days triggered in short, and I got a short squeeze. That wouldn't be considered a scalp to me, but just taking a trade based off of the working the low of the week is usually going to be a session scalp for me. Okay, US 30. Let me zoom out. I've got some notes, I think, still left up here. Took it already, Paulie. I'm guessing you for the short. Is that what you're saying? All right. Oh, it took the long off the low. Nice. Okay, last week. Last week was not an inside week. They triggered previous week's low. Friday was an inside day. Unfortunately, I didn't leave all my notes up here, so you're going to have to bear with me as I type through all this. Inside day. Also, possibly a first green day. So we'll get that thrown up there as well. Uh-oh, look out. There we go. Okay, so we have this this is actually an interesting pattern. So we'll get the inside day back over here. Get an inside bar. And then you get the peak formation high, peak formation low, outside day. Inside day, outside day. And then remember that drawing that I drew at the beginning? Actually, do I have still pulled up? Ooh, nice. And it's on there. Good. Peak formation high, peak formation low. I always draw this silly little thing over here, right? I peak high, peak low. It goes sideways, and then I draw the little thing. It goes sideways, and I draw the little thing. Peak formation high, peak formation low. It goes sideways. So this is me drawing the little sideways. And then there's the breakout, and it continues to go higher. It could have broke out to the downside, and I would be drawing it lower. There's the breakout, and then the ascending channel. Now, this would have been extremely difficult to trade, admittedly. However, just taking a look and seeing what time of day all this is, there's 8 o'clock. Notice how there's a very small consolidation down here that breaks out. There's your pin hammer, 715. The candles are ascending. The candles are not, the previous candle's low is not getting hit. They just keep dragging higher and higher and higher. There's your stop hunt candle to the bottom of the range. To the bottom of the range that immediately reverses and goes the other way. New hour opens up and begins to go vertical. So this, ideally, this is the trade right here. After this candle closes, or maybe on a lower time frame, once they pull back up into this little channel, that's where I'd normally be looking to start getting long. Anyways, so this goes inside day, outside, inside first green. Next day, same thing again. Pulling. There's your stop hunt outside of the channel. That goes vertical in the gap time, and they do the exact same thing again. Now, this would, again, been very difficult to trade. So your first green day, push 1, push 2, push 3. Monday, opening range, high of the week, all right? And then let's see. Where does this go from here? All right, so Monday, peak formation high. This was also day 1 of the cycle. They broke out, and that breakout failed. So I have a very good starting point for the cycle, although today is already day 3, so it doesn't really matter. Day 3 of the week. Okay, so now that we understand, yesterday was day 1 of the cycle, or Monday was, excuse me. Was this also a first red? No, it's not. This was breakout day 1 yesterday. So everybody out there should be screaming in your brain, hopefully, wow, it was a breakout day. It was the first day breaking out to the downside, and the market only does 3 things. So I should project that level across and see what's happening. I should be looking for 3 levels of rise and looking for the trade. That should be what is, playing over and over in your head whenever you see breakout day 1 and things like that. So we get the breakout. There's that pen that starts the move back up. And if you're into studying price action, which I really hope that all of you should be, first leg up. After the breakout, there's your peak formation. Oh, no. There's your peak formation and your breakout, and you get 3 peaks. Peak 1 and peak 2 and peak 3. And we can even go and study, well, how did peak 3 form? And how do we know that this is peak 3? Well, there's 3 peaks. I don't know what to tell you. But how did the end of that peak sort of play out? Big candle to the high, and then sideways. Big candle to the high, and then sideways. Big candle to the high, ending in that nice 1, 2, 3. 1, pause, and then a 2, and then a pause, and then a 3. And then on that engulfment back down, something that's really interesting is usually that will take out push 2, so peak 2, push 2, push 2 in the third push, or in the third peak. So if I bought anywhere up here, in fact, even in this scenario here, if I bought anywhere up here, Notice how that engulfment takes out all of those people. It does not let them out of the trade. So those are like the little things that I like to look for to help me or give me more confidence in the trade. And also, place stops. If this engulfment happens and I take this trade maybe one tick below this bar or on a 5-minute chart, maybe I can get in a little bit earlier. I don't want to put my stop all the way back up here because that's probably going to be a bit wide. But what I can do is I can look for, okay, there's push 1, there's push 2, push 3. I really don't think they're going to go back up above here because it's a very clear push 2. I'm going to put my stop here and then, targets wherever. All right. So that being said, 3 levels of rise, 3 peaks. The trade kind of happened already in the gap time. We have not triggered previous day's low yet compared to the NASDAQ, which they have. And again, they could be working the low. Maybe we're going to get a big pullback. We'll see. On NASDAQ, looks like 3 days of breakout outside the opening range. Well, the opening range was on Monday. All right, so 3 pushes outside of the opening range to me is going to be, the minimum would have to be Thursday. So like Tuesday, Wednesday, and then Thursday might be that third day of shorts or longs triggered in the market, or the third push outside the opening range, J3. Okay, Wednesday, or goodness gracious, oil. Some notes from this. We've been breaking out to the upside for a while on oil. All last week, we were front side of the move. Breakout day 1, breakout day 2, breakout day 3, even going up into breakout day 4. And you can see my notes from last week. No lower low on the inside yet. We're still in a strong trend. They broke out on Monday and gave us the first red day. So this was day 1 of the cycle, and they broke the front side of the move. Okay, so this was day 1 of the cycle. They triggered previous day's low on the next day, day 2 of the cycle. Let's go and put first red day in here. This is how I track, and this is how I look at the evolution of a template. Okay, day 1, day 2. Now, on Tuesday, they broke out and it failed again, and now we've gone back and triggered the other side of the range. So what I'm going to do is I'm going to restart this cycle again, day 1, day 2. And in fact, what I'm really going to do is I'm going to delete these. And you might be asking, well, why would you delete those? Probably because I have a template possibly forming, and I want to focus on that more. Look at this one right here. Monday breaks out of Friday's high. Tuesday breaks out of Monday's low and fails. Okay, something like this. Now, context of the market is always going to be important, so let's go back and take a look. We had a first red day that was a trap and continued to go higher the next day and broke out. Now we're back at the high of the week after peak formation high, peak formation low, fairly wide peak formation high, peak formation low. They triggered previous week's low or previous day's low down here. Is that where the pump began? Number 1, that's going to be my first question to myself. I don't have a really solid trade to look for right now. The most ideal scenario would have been for this trade. Monday breaks out of Friday's high. Tuesday breaks out of Monday's low and goes sideways in consolidation down low. All right. And then on Wednesday today, we could have looked for stop hunt to the low and then vertical move back up towards the high. That would be the ideal trade, right? Because I have a lot of reward there and not a lot of risk. But now it's already gone back to the high. So this is the evolution of the template. We're already back at the high, peak high, peak low. We even have a lower low after 3 peaks. Let's take a look and see. We get the breakout here. Use this little trick here. Asia, London. We were making higher highs and higher lows. They broke out. They made a higher high. Came down, made a lower low. So I'm going to write this and draw this in here for the day. And I'm going to look for... Now, I'm not saying that this is going to happen, because I have no idea. But we have a peak formation made at the high of the current week and a lower low on the inside of the previous day's range on day 3 of the cycle. I'm going to look for a pump and a dump. Okay, I have no idea if that's going to eventuate, but that is what I will be looking for based off of setups. So we've got the engulfment, push 1, pause, push 2, pause, and then maybe push 3 and an engulfment down. Again, that is what I will personally be looking for, but we will see. All right, front side of the move has been broken. Something that Al Brooks talks about is once the front side of a move is broken, a retest of the high is very common, which is why a lot of times you'll see in trading systems the break and the retest system. This would be like a break and a retest if I was to put it in more, retail terms or whatever. Oil inventories later. Yep, 10:30. It should be 10:30. I have to double check. Can you please explain gold? I've been struggling with it. Absolutely. We're going to get there here in a second. Oil is tough. Hey, Paulie, hopefully that breakdown helps a little bit. Sometimes the evolution part of it and framing the day and things like that is quite difficult. But this is exactly what I'm doing right now is kind of how in my brain I go through it. I just look at every detail and I think, well, this has happened and then this will happen. What should be happening? So like how I did this where I say, hey, this is the template, peak high, peak low. It should have gone into consolidation down low so I can get my vertical move, but it's already gone vertical. So, what's the evolution from there? Don't get caught up or tunnel visioned in the fact that this has happened. Oh, well, this is day 2 and today's day 3. And well, today's day 3 of the week as well. And you can see how that would become very confusing. Don't let it confuse you. It is very simple. And FOMC. Yep, the minutes today, John. I think it's just the minutes at 2. All right, let's go to gold. Holy cow, I've got some notes on this one, don't I? All right, so I had the front side pump over here, and then I put this up on Discord the other day. Again, evolution, right? We had day 1 of the 3-day cycle and a first red day, peak formation high on a Friday. I'll write that in there for you all. Let me double check that that's correct. Yes, so that is the high of the current week. Day 1 of the cycle. We get the first red day. They open the day here. They put in the high, and they made their lows in the afternoon with a very weak close as well. We get the lower low on the next day, which is perfect. That's exactly kind of what you want to see going into the New York session. They pump it back up. There's your ramp. You got ramped volume back up into the high of the day. Stop hunt back up to the high. Leg 1, pause. Leg 2, pause. Leg 3, ending in 1, 2, 3. I don't know that that's 1, 2, 3 until I get my peak formation high. There's your engulfment. There's your retest of the high, and then the continuation to go short back down. Now, I think there was news at 8:30. You get your second retest of the low, double bottom, and then the reversal. So probably should stop looking for trend trades at this point because the timing is not right. Anyways, so that was that. Oh, I'm going to skip these ads. I don't want you to all miss this gold part. Now, Monday, opening range of the week, peak formation high and low. A breakout day. They closed outside of Friday's range and went back for the high on Tuesday. So that is going to restart the cycle once again, right? Because we had a breakout of Friday's low. And then it failed on the following day and even triggered previous day's high. So I'm going to move this down over here. I'm going to chuck day 2 up over here. And in fact, what I'm going to do is I'm going to label this as something like this. End of day consolidation. Looking something like that. Nice little rectangle forming. And then I would just go into today. It is day 3 of the cycle. Oh, let's take a look and see. Do I have any signal days. Sorry. Just looking at this, how this broke out. It's very close. It's so close that I'm not even going to worry about is it a breakout or is it not. It's pretty close. Looks good. All right, so as far as like what to look for, we're already back at the high of the day. We're at the high of the current week as well. And we're possibly broken out to the upside in a market that is already breaking out. Last week was week 1, breakouts to the upside. Okay. Why in the world does that matter? Well, after week 1 breakouts to the upside, for example, we've been trending down. I don't know about necessarily trending, but kind of in a consolidation. First week breaking back out to the upside, breakout pullback. Are we going to continue that trend higher, or, is it going to reverse? I don't know. But the idea is to maybe look for a 3-day template that would have a trend. It's week 1 breakouts. We get the dump, breakout day 1 to the upside, and then maybe now today, day 3 to go vertical. I'm not 100% sure on this one. It's kind of hard to get a good read, so I'm going to take this one cautiously. I do really like the peak formation low, peak formation high. I really like that it's breakout week 1. I like that this first red day kind of failed. And then I like that kind of how we're consolidating here. So just with those facts in mind, I'd be fine to watch this. But we'll see. In WTI, is it wrong to say that we have a failed breakout at the low and high? Yep. I think you might have missed that, J3. The day 1's repeated, but that's not the important part to me. It's peak formation low, peak formation high. We're back at the high of the week now. We've made a lower low on the inside and pulled back. That's it. Monday's liquidity is down low. I think you're talking about on gold. This pin, that's also not a bad thought. Not only is that pin, but also, we got the ramp. We got ramp money. We got the little, the toll road, the toll road here. You gotta pay your fees to go higher. Possibly where the pump began. We've triggered previous day's low, so maybe this is, this is the pump up. We triggered the low. That's the break in structure, the retest of the high, and they failed to go higher. So maybe, 100%. This could be a pump for a dump. I wonder, let's see. Can I see 3 levels of 100? Peak formation was made. Double zeros here, so 100, 100. Maybe this is our 300 pip box here. Peak formation was made basically at double zeros here at 2,630. They went up and peak formationed out at 2,660, making a lower high. So it's not a bad thesis, I don't think. We will see. Also, shout out to Yanni if he's in here in the stream right now. He's put me onto this color scheme for the 100 pip box, which I instantly fell in love with. So I will be using that from now on. All right, let's go to the Russell real quick. We'll take a look and see if this index is any different. We had breakout day 1 on this pair as well. And then now it's kind of similar to the NASDAQ. We have broken out and triggered previous day's low, except this is already in breakout now to the downside, whereas I think this is pulled back on the inside of the range. Yep. And that's really the only difference that we're getting on this index. Does anybody have any pairs they want me to go over? I've somehow made it all the way through this in 36 minutes. Does anybody have any pairs they want me to go over? I already have a feeling we'll probably get natural gas as a request. Possibly. Maybe. Let's see here. Natural gas, I'm on a 15-minute chart. Monday was a breakout day. Again, breakout back down to the downside. Peak formation high, peak formation low. Breakout day 1 to the downside. Yeah, that's interesting. Let's go to the euro. Seeing the euro. I think the euro is the one I saw first. Oh, actually, the Australian CAD was next. We'll do the euro first and we'll come back. All right, Friday, inside day. Monday, breakout day 1 to the upside. All right, it looks like this has been, breakout day 1, breakout day 2, breakout day 3. Then you get your inside day and a reversal. So this is breakout day 1. Going back up to the upside, then you get an inside day again. And we've triggered previous day's low at the low of the current week. So again, this is going to be a questions game, in an understandings game, where Monday, Tuesday, Wednesday. Monday was the opening range. Tuesday, you get an inside day. Today is Wednesday. So what would be the textbook template that I would look for in this scenario? One of two things. Number one, range expansion of the inside bar. Could be a breakout, pullback, and a trend. We could be going for one full expansion of the range. How would I need that to set up? Pin down through the low, pullback, explosion. Breakout, pullback, explosion. Notice that both of these, there's some kind of pullback. I'm trying to get in on the pullback. That would be a good range expansion trade. What would be the other thing that I would want to do? Well, it could be a breakout. So like right now, notice how there's kind of a order flow buildup. It could be a breakout. And then now we have all this order flow buildup. They're working the low of the day. They're working the low of the current week. And it explodes back up towards the upside. And I could be looking for a low of week scalp opportunity back up towards the money. All right, I'd be targeting the money. These breakout traders are still in profit. They need to get stopped out. I've got my little ramp here. Only two things as far as like playbook opportunity. For the person that asked, EU, hopefully that helps. TR, oil trade in London. It was breakout day 1, I believe. Oh, wait, no, wrong thing. Oil short in London session today. It would just be a high of, I think this is what you're asking. You're asking about in the gap time over here when it reversed. That would just be considered a high of week trade. We got 3 peaks, 1, 2, and 3. Which is playbook, but not in the gap time. No. The first red day is great because we had the first red day and it broke the front side of a move and went back into consolidation. So my only consideration for this is that this could just be a retest of the high. So thinking more retail. They've came back and retested the high and then made a lower low on the day. So maybe that's, we'll put it this way. Maybe it's weakening or something like that. I don't really know for sure, but we're going to hopefully see come 10:30. And I've got my little, that's why I've drawn it like this, breaking structure. I've drawn my line here to show like this is where that pump up back up has began. We're still in breakout though, so I really want to see this breakout fail. We'll see. You're welcome. Pound yen. There are some other people that asked before. Let's go back to Australian dollar CAD. Okay, Friday was breakout day 1. We had first day of longs triggered into the market, breakout pullback, and then the continuation on the next day. Breakout day 1. first or second day of longs triggered into the market. Third day of longs triggered into the market on Monday, and that clean reversal, it looks like, to go back down. Triggered previous day's high, previous day's low, day 1 of the cycle, day 2 of the cycle, and then today being day 3 of the week. Looks like they made that lower low, and then looks like there was a good trade in Asia for that. I don't trade Asia, so it doesn't really matter though. It looks like this pair might move in Asia pretty well. Sometimes. Just double checking. So this would have been day 1, day 2. Today's day 3 of the cycle. Is it going to trend away from day 1 highs? Or are we going to reverse? This is a little bit tough to read. I'm not even going to put much input in on this. Let's see. Bitcoin. All right, first day of longs triggered in. Breakout day 1, breakout day 2. Inside day reset on Monday. Breakout day 1 again on Tuesday. And then now we've got the reversal. First red day, breakout day 1 to the downside. Is the market going to continue to trend lower? Again, screaming from the top of your lungs and the top of mine. Market only does 3 things. We're in breakout. Is it going to continue or is it not? I look for 3 levels of rise, breakout day 1. So this isn't exactly doing the correct thing for me. And that is, I think that's actually all I can say on this. Tony, good stuff. GJ. Happy New Year to you. Pound you in. Okay, this looks very similar. Ooh. Now that is... This is extremely clean, and I'm going to explain why. When I described those 3 scenarios a few minutes ago, remember I said it pins down through the low of the day or the previous day's low? This is something that Stacey talks about quite a bit. And I did learn from him, so I'm giving him full credit for this. When it pins down through or triggers the low and then pulls back, and then you just use timing, this is one of those scenarios. They pin down through the low, and then it pulls back into a certain time of day. This is a new hour open. For that range expansion, remember I was explaining the inside day range expansion pieces? This is beautiful. First red day. Day 1 of the cycle, are we going to trend away from day 1 highs? First red day, day 1 of the cycle, day 2 of the cycle, after a first red day, triggers previous day's low, making a lower low, and pulls back in the gap time. Push 1, pause, push 2, pause, push 3, peak formation high, traps above push 2. They trapped everybody with that 1 bar. This is a beautiful trade. It's just in the gap time, unfortunately. But if you want to take a picture of this, just do something like this and put your little details up there, all those things that I just talked about. Pump. This is where the pump began. Get a little bit of a ramp over here for the market to fall back down through, and over here. And then you get your first red day. And then you get your lower low. So I'm going to make sure to add that detail in there because it's extremely important. Oh, I don't know why I'm typing first red day again. There we go. There's your lower low. And then you can go and label off these 3 pushes back to the high. Label the time. you could just put new hour, because that's what's important. And then I would put like traps above P2. Something along those lines. But yeah, this is a really clean chart, and those are the reasons why. GJ. All right, any other pairs you all want to see? All right, ladies and gentlemen, fantastic stream. Thank you all for being here. Going to get back to my normal schedule. We got a video coming out this weekend on 3 days of breakouts and 3 days of longs and shorts being triggered into the market. One of the playbook opportunities. I hope you'll have a great rest of your day, great trading day, and I will see you on Friday. See you then.